Excellencies, ladies and gentlemen, we are now moving to Roundtable 1 on the topic of joint investments, what strategic opportunities for the coming years. And for that, it's my pleasure to welcome on stage our moderator for this panel, Mr. Daouda Fall, founder and CEO of Brahms Group. Please give him a round of applause.
Good morning. Pleasure to be here and to be moderating this panel with leading voices from both Africa and the GCC. So I would like to start by calling and inviting our panelists to join the platform. So Paul-Harry Ettner, CEO and Managing Director of Ecobank Transnational Incorporated. Would you please come on the floor? Our next guest and panelist is Cyril Nkounchou, a big brother of mine, CEO of Enco Capital. Thank you. Now, we have the honor and the chance of having Mohamed Abdullah Al-Hamak, who is the Executive Manager, Group CEO's Office of Doha Bank. Oh, pleasure to meeting you. You need to remove the badge. No problem. Thank you. Thank you so much. Our next speaker would be Ahmed Saif Musallam Al-Rawahi, member of the State Council of the Sultanate of Oman, and a big fan of Africa. Let me say hi to you. Have a seat. Thank you. This here? Yes. For our final guest, a brother from East Africa, James Moria, who is the Group CEO of Centum Investments. Thank you. For this panel, I think the three keynotes that we have had the chance of actually setting the stone of this panel. And I would like to quote two things that both keynote speakers have mentioned. Mehdi Tazi said, "We are the continent that will build the future." And I think that's very powerful. And Linda said, "We are looking for partners that will build with us and not for us." In that regard, this panel that is tackling the joint development and alignment of our two continents between African and GCC is actually spot on, because we have the chance of having leaders that are in their industries and the finance industry that can actually speak to them, and we can get into the details of what can we achieve together. Very briefly, for me, finance is very important. Brahms Group is a project developer and an investment platform that is focused on energy and agriculture in West Africa. So I'd like straight away to get into the inner details of what can we do jointly to actually develop our countries. First, I would like to start maybe with Paul-Harry, Cyril, and James, and ask them, in terms of finance institution, for each one of you, first, can you please, one, introduce your company, and then tell us what are your needs, and how would you actually attract capital from the GCC? Thank you.
start. Thank you. Thanks for the invitation. My name is Paul-Henri Etnad, and I'm the CEO of Ecobank in Côte d'Ivoire. I'm also the regional executive for Ecobank. I'm looking after what we call UEMOA, that are the French-speaking countries in West Africa. Ecobank, in my opinion, is the best example of what should be the cooperation between Gulf countries and Africa. Actually, the Qatar National Bank, one of the largest banks in Qatar, is one of our largest shareholders, and this has been the case now for the last decade, and I can clearly express a true demonstration of what could be the cooperation between those two regions. My assumption is that when Qatar National Bank is looking to invest into Africa, they were looking for three things, and they have found those three things in Ecobank. The first one is a diversification play. For them, for the Gulf countries, I think Africa is definitely a diversification play. How can they invest out of their comfort zone that is mainly into oil and gas and energy into some other sectors that are not correlated to those two sectors that I've just mentioned. So that diversification play is within financial services. You can decouple the relationship between what is happening in energy and what is happening in financial services. I think the second reason is the scale. Africa is lucky enough to have a large population. If you're taking Ecobank, for example, we are present in 33 countries on the continent, which is a massive opportunity for any bank coming from the region. So through one entry point, you can have access to significant scale compared to what you are having here in the region. And thirdly, I'm assuming that it is a return play for financial institutions or countries in the region. They can see exceptional returns when they invest into Africa. If I'm looking at the banks, for example, our return on equity on a constant basis is above 30%, and that is something that, in my opinion, is appealing for countries in this region. I think what matters is to think about what we can do further. And in what we can do further, I'm still seeing some specific barriers that we need to pay attention to. And I just want to take some time to mention some of them. The first one is the perceived risk of Africa is still something that is constraining the investment into the region. Africa is still seen as a region with a lot of volatility, uncertainty, complexity, ambiguity, and there's a need for us to build this dialogue for investors in this region to understand better what is the reality on the ground and how that reality can be transformed into opportunity. The second barrier for the future is, and I think that I heard about co-creating in the previous intervention, I think it is important to think platform, where you link together institutions sitting in this region and institutions in Africa. And that platform is very important, especially in the financial services. Just to give an example, and I think that James is going to talk about it at some point, in Africa, we are collecting close to 500 billion US dollars every year in terms of savings, either through pensions, through banks, through insurance, or through investment funds. How can we link that pool of capital to the capital that is coming from this region to develop new opportunities? That's the part that is important for me. The co-piloting, the co-creation of new opportunities are things that I think that we need to pay attention to. And I think that financial services sectors in Africa and financial services in this region need to trigger that dialogue on a more intensive note.
Okay.
Thank you.
Thank you, Paul-Henri. We will pass on the microphone to Cyril.
Thank you. Thanks for the Doha Forum and for Choiseul Africa for inviting me to this forum. Happy to be here in Doha. And I'm the co-founder and managing partner of ENCO Capital. We are a Pan-African asset management firm with 1.5 billion in assets under management across 3 strategies: listed debt, private equity, and private capital. So we have basically about 50 people, 6 offices across Africa. I'm particularly in charge of private equity, so I can speak to your question more in the context of the private equity. And I'm going to go straight to the question of really what can we do to get more GCC capital flowing through African private equity. And I think, first of all, I think African financial institutions need partners, not passengers. And I'm saying that because I think it's important. The most important need for private equity in Africa is patient capital. And obviously the GCC, with over 6,000 trillions of US dollar of asset under management across just the 4 biggest sovereign funds, is probably the largest single pool of patient capital in the world. And the reason why we need that patient capital is because obviously Africa's growth, infrastructure and SME cycles are long cycles. It takes 7 or 12 years, so we need patient capital. And I think we're happy to basically sit in the region on the largest pool of patient capital. The second important aspect is in private equity we need anchor investors, and when the QIA or the ADQ anchors an African fund, basically it sends strong signals to the market, and it allows development agencies, but even local pension funds to follow. So, we cannot underestimate the leadership role that, these institutions can play in terms of catalyzing not only international capital, other international capital, but even local capital. So I think that's the important part. The third aspect is basically we need to develop co-investment partnership because, obviously, Gulf institutions, given the scale of the asset they have under management, they need scale above all. Africa can deliver return, but sometimes it's very difficult to access investment because, the countries it's fragmented. So how do we basically get that huge pool of capital to flow through the opportunities? And I think that's really where general partners, basically asset managers like ENCO, can play a role in sourcing and executing deals. Paul-Henri mentioned that it's already happening, actually. If you look, for example, you take the example of Qatar, there's already success stories. Paul-Henri mentioned one in EcoBank with the investment of QNB in EcoBank. I was the other day in Cape Town at a famous hotel called the Cape Grace, and I was meeting with the Casada Hospitality Fund, which is backed by the QIA and Accor, and they've built one of the largest hotel platforms in sub-Saharan Africa. So this is already happening. I think, beyond private equity, you see that Qatar has delivered operating success with, QNB investment in North Africa. We mentioned in sub-Saharan Africa with EcoBank, Ooredoo in the telecom, Qatar Energy in, for example, the Mozambique LNG. So clearly it's already happening. And basically, why should GCC investor care? I think they should care because Africa, we believe, and it's been proven certainly by especially the data as they relate to FDI, that it has generated historically one of the highest return on investment. So I think it's profitable to make investment in Africa. So also, these investments align very well with GCC priorities in areas such as food security, energy transition, logistics, digital infrastructure, and climate. So I think, really to summarize, GCC investors need to anchor African PE funds. We need to build basically GCC Africa co-investment platforms. And yeah, potentially we can use blended finance with DFIs to mitigate the risk while enabling basically GCC investors to deploy large ticket, because scale is really one of the biggest impediment for deploying capital in Africa.
Thank you, Cyril. James, coming to you, same question. If you could introduce your company, what you do, what are the needs, and how you see in that sector, how would you attract capital from GCC?
Thank you very much. Good morning, ladies and gentlemen. I am James Moria. I'm the Chief Executive Officer of Centum PLC. Centum is an almost wholly Kenyan-owned listed investment company. And we've been investing now in East Africa for almost 50 years in equity investments, and we've been successfully doing so. So in terms of track record, we've been involved in a whole host of sectors, and we facilitate investors to come in at a later stage. So we take the early stage risk across a range of sectors. Now, coming to the opportunity for the GCC, in my view, it's interesting that we're having this forum just after 2 days here at the Doha Forum. And I attended a number of sessions, and there's a universal consensus that the global order that has existed since 1945 is changing. There are a couple of maybe 5 key trends that are happening globally, which really will reassign the role of Africa to be a much more attractive location. Some of those trends are demographics. Africa has the youngest population. You have an aging population in many other parts of the world, and a resistance to immigration. The second one is multipolarity. The world is shifting from a unipolar world to a multipolar world. Now, the world we've been has not been favorable to Africa, because Africa was consigned to the role of producing raw materials. Now the world has to think, where else do we produce these goods? Especially given that we have both the raw materials, the energy, and the human capital. The third issue is this weaponization of trade tools. The fourth issue is climate change and the energy transition. So if you look at all those issues, my take is that the role of Africa is going to change. The order we are coming from, Africa was consigned to the role of being a raw material producer. Manufacturing was in Asia, and capital and advanced services was in Europe and the US. Now people suddenly realize that's not such a good idea. You need to have a diversified supply chain. And we've been the source of raw materials for a very long time. So capital that was invested in Africa will not earn a high return on capital because it's in a low productive economic activity, which is production of raw materials. Now, as the Americans look at where else do they diversify their supply chain, then you need to come and add value on the African continent. Europeans, who for a long time wanted us to remain raw material producers, have a problem because in that structure, you then have the problem of immigration. So to keep unplanned immigration out of Europe, you need to have production in Africa so that you can engage the labor force. And the East, you're now thinking about where to diversify the supply chain and bring manufacturing. So the natural location for this to happen is on the African continent. And the GCC is not a competitor with Africa because you have structural complementarity. You have capital, but you don't have the population. We have the population, we have the location, and you have the resources. Now with your capital, you have now an opportunity to deploy it. And then now you have market access. So if I take the example of a country like Kenya, we have an economic partnership agreement with the EU. So you can access the EU market duty-free, tariff-free. You can access the US market. So the point I'm making is that the structure of the investment opportunities available are changing in Africa. And Africa is now so changing from being just looking at it as a market to being a producer and solving global problems. And that creates a very compelling investment case where you can deploy significant sums of capital into highly productive sectors to solve global challenges. So I see this as a very exciting phase. And personally, I'm excited by all these changes that are happening, because with the game of musical chairs, suddenly Africa can be sort of playing a different role. Thank you very much.
Thank you. Thank you, James. Now, we've heard talking about Africa having the demographics, Africa having the minerals and the strategic investments. Coming to you, Mohammed, what is the vision of Doha Bank with regards to Africa, and what is the strategy? And we'll also ask the same question to Alfred.
Thank you. We're fortunate enough in Doha Bank to be one of the few GCC banks that actually have a presence in the African continent. We've been actually operating there for a while, primarily dealing with the likes of Zenith Bank, Standard Bank, and we're looking at opportunities that are actually mentioned in the energy space, and additionally also in the agricultural space, which I believe will be discussed in a panel later on onwards. The reason being is because around 85% of our GCC food security needs are imported. And with Africa being, there's a huge amount of opportunity where we can invest in, for example, food processing. That is a huge opportunity as well, and it could be mutually beneficial for both sides of the region. Additionally, there are also, as you mentioned, as you've heard before, that Africa requires about $60 to $100 billion of annual infrastructure investments. And what Qatar has able to produce, as the world has seen with the World Cup, I'm sure everyone here has used the Hamad International Airport. There's also the Hamad Port. So there are so many things that we could leverage in terms of our expertise that we could bring in, and to establish that kind of partnership with Africa that it can leverage and be mutually beneficial from both sides. There are tremendous amount of opportunities, even in the banking space as well. The continent has about 400 million of unbanked potential customers. The idea of Doha Bank is we want to make things as seamless as humanly possible, whereby a payment can go from Doha to Dakar seamlessly. We also want to be developing software whereby to tap into the ever increasing middle class in Africa, to have them participate in the Qatar Stock Exchange, where they can buy and sell equities as well, not only in Qatar but across the GCC. But those are the kind of opportunities that we're looking at right now. Yeah.
Okay. Thank you very much. Ahmed, from the Oman's perspective and Oman's 240 vision, what is your angle with Africa?
Okay. Bismillah ar-Rahman ar-Rahim.
In the name of Allah.
First of all, I thank the government of Qatar and Suzail company for inviting me. I will put my answer in three forms. The first one I want to say is, for those who perhaps do not have enough background, the Gulf, the Arabian Gulf, is not new to Africa, and Africa is not new to the Arabian Gulf. We have been trading for thousands of years. And we in Oman have had relation with the eastern part of Africa for thousands of years. And to give you a scale of how close we are, because it sounds Africa and the Gulf, for somebody who does, we are connected at Bab el-Mandab, Djibouti and Yemen, and the shortest area, shortest distance between the two continents, the two parts, is 26 kilometers. 26 kilometers. Just to give you a feeling of how close we are to it. So you can imagine, you know, the sort of flows of people and goods and services for thousands of years. So we are together, but we want to do it in a modern way. A second small point I want to mention to you, that Africa is not new to the Arabian Gulf. 10 years ago, or 12 maybe, I went to visit Mozambique on business. I had the honor of meeting President Gobuza, who was the head of state at the time. And in a conversation, he didn't know that I was from Oman. And he told me, you know, Ahmed, you know, the name Mozambique comes from an Omani gentleman, Musa bin Bek. And the people in the north of Mozambique, 10% of the people in northern Mozambique, which is predominantly Muslim, they have ties, blood ties with Oman. So I just wanted to give you a feeling of how close we are to each other. It's not something new. And I'm sure on the West African side also, we may have that. Then the second part is my advice. I'm also a banker. I was chairman of several banks at several times in Oman. And banking issues are close to my heart. But before I come to that, I have either a suggestion or an advice to both my African brothers and sisters, and also my brothers in the GCC. Oman is a member of the GCC, and I happen to be also a member of the Consultative Council of the heads of state of GCC, which is called in Arabic, هيئة الاستشارية لقادة دول مجلس التعاون. So, you know, we are coordinating policies with our brothers all the time. But I want to advise that there are certain ground rules of interrelationship economically. Some of the ground rules are, there are certain agreements, either bilateral or unilateral or multilateral agreements of protecting investments. And these need to be put in place for each country that needs, that wishes to establish investment relation with either with the Gulf or any other country for that matter. So that is one. The second is to be part of an insurance setup, insurance apparatus of investments in another country. That is very, very important. It will give the funders from the Gulf more safety and more security to feel that, you know, because as you all know, capital is coward. Capital is coward all the time. So, you know, we need to put that in place. Another thing we need to put in place, although we ourselves in the Gulf have not been able to succeed until now, is to have fewer currencies than the ones that we have today. Because now you have to do with how many currencies. In the Gulf, we have 6 currencies. And in Africa, I would say about 30, 40, you know. In the West African side, you have succeeded, you have CFA, et cetera. But so the less number of currencies you have, when we have even on our side, the more we can work together, because then you don't have the complication of, myriads of exchange rates, and exchange issues. So with that in mind, if we manage to put that, and I would also advise African countries and our Gulf countries to have more embassies with each other, to have more embassies. And the embassies these days are not political or diplomatic, they are economic embassies. So that you have your ear on the ground to see what is available in that country and what do you have that can support the other country. So I know it's expensive to maintain embassies, but you can have basic embassies with economic, commercial people. I think that will help a lot in understanding each other, in cooperating with each other, in arranging shows, trade shows, etc., etc. Now I come with the finances that are available in the Gulf. In the GCC, we have around $6 trillion of wealth, of sovereign wealth, 6 trillion. And that does not include central bank reserves, does not include pension funds, does not include family, commercial family wealth. If you join it together, you can do your own extrapolation. But even standing at 6, that's a huge amount of wealth that instead of not all of it is in cash, of course, a lot of it is investments, but Africa can have part of that in a larger form than just 100 billion that has been invested now. We have pension funds in our countries that allows perhaps that are allowed to invest up to a certain percentage, maybe 5, maybe 10% outside the country. Africa could be a good place for that. We have families that want to invest outside. We could create some sort of baskets, funds to create, to invest in Africa. And then we have banks, big commercial banks that has a certain percentage of their wealth, of their balance sheet, dedicated to investment overseas. And where else now than Africa? Okay. So these are the opportunities. And in terms of where the problem lies in Africa, I cannot claim to know more than you gentlemen.
I think we will ask the gentleman what are the inherent problems, and you can answer if that's...
But for the population to be only 40 to 50% banked, that is very low.
Yes.
It means either people put their money under the mattress, or it's hand and mouth that needs to be improved. We need to create jobs and wealth for people to have. Another thing also, a lot of small businessmen would require perhaps in Africa what do you call the small credit?
Microfinance.
Micro banking.
Yes.
Micro banking is needed. And I'm sure there are, even in Oman, I know a few banks that would be interested in that, to do it in Africa.
Thank you, Ahmed.
And many other opportunities, but I will leave for my colleagues to complete.
Thank you so much, Ahmed. I think I would like to bounce on one point, tackle on one point that you've mentioned that is very real. is that capital does not like noise, and capital likes predictability and regulations. Maybe from a banking perspective, Polari, can you tell us what are the regulations or what kind of initiatives can we as African put in place jointly in order to mitigate the risk or the perception of risks from GCC countries and provide them a solid investment platform? Is it possible to create a joint rating agency or any other initiatives that could strengthen and improve this relationship and this dialogue? As we've heard, there's $6 trillion of funds available, but we're still not attracting it. So how can we make sure that the money is safe when it comes to Africa?
Thank you. I'm not a big, I need to be careful about what I'm going to say, but I'm going to say it anyway. So I'm not a big believer of an African rating agency. Because even if you have an African rating agency, you need to play by global market rules. So if the investor wants to look only at Fitch, S&P, there's not that much that you can do as an African country. So I'm not a big believer. I may be wrong, but I'm not sure that is the element that is going to be the de facto X factor in Africa. However, from a regulation perspective, I think there are two things that we need to consider as African countries. The first one, and I have a very strong view about it, is the fact that our markets are too fragmented. And capital flows between those markets is a nightmare. And you cannot build a sustainable and a scalable capital market if flowing money from one country to another is a huge issue. And I think that echoes what you just said. When you have 30, 40 countries, each with regulations, it does create an issue. I want to make a proposition that we can think about. And I understand why all African banks want to make sure that they have their own regulations, because to some extent, they are all linked to fixed FX regimes, so it's important to them. But if you can just say, and I'm using the pension funds, the pension fund for South Africa or the pension fund for Nigeria is investing massively and firstly into South Africa and into Nigeria. Why don't we allow all the national pension funds to be able to invest every year 10 or 15% of their capital outside of their domestic country? If you do that, you create a massive pool of capital, close to $50 billion every year, that can be deployed into private equity firms or investment funds. And if you blend that capital with money coming from the GCC, that's how you make the difference. So free capital flow across Africa is something that is important, and it's something that is important for the GCC countries, because if you ask them to come to invest into a country that has a GDP of $5 billion, and you say that I want you to invest 100 million, they're not going to waste that much time on a $100 million investment. They want to think about $1 billion, $2 billion, $3 billion, $10 billion, $20 billion. And you do that only if you allow capital to flow across the continent. That's proposition number one. Proposition number two, And once again, it echoes a little bit what has been said earlier. The regulatory posture in Africa is also too fragmented. You have certainly close to 40 to 50 different central banks, each with their regulation. We need to find a way to harmonize those regulations. So if Qatar wants to invest $100 billion in 5 different countries, they don't want to waste that much time to understand regulation of each country. So if we can do common rules in terms of investment when talking about countries in Africa, that can create also an incentive for those countries to invest into Africa. So those are the 2 propositions that I want to put on the table. Thank you.
Thank you so much, Polari. Coming back, we hear all these big amounts, 5 trillion, 550 billion, but we also know that Africa, because they're fragmented, the capital that is required to invest into projects is very rare that it will go beyond the 100 million if it is not an infrastructure project. If it targets, as you mentioned, the SMEs. Cyril, coming to you from a private equity perspective, the size of the transactions that you do, can you please tell us if they match potentially with your limited partners, of your LPs that you target from the GCC? Are these transactions big enough for them to make sense?
I think you mentioned earlier that there's 6,000 trillions basically of capital that basically is owned by essentially 4 to 5 institutions. Clearly, if you put yourself in their shoes, one of the biggest challenges is really deploying capital, because as you know, in our industry, it takes the same time, the same amount of time to deploy 2 billion or to deploy 20 million. So that's really the big challenge that we're facing as African. I mean, Polari mentioned the fact that the fragmentation, obviously, of African markets is really a big hurdle, and makes it very difficult to basically channel that capital through the opportunities. I think the opportunity exists. I think we've mentioned the deficit in terms of infrastructure. We've mentioned, in every single sector that, you can think of in Africa, there is, a deficit of capital in 100 billions, So the need is there, the capital is there, but the capital is concentrated, and the question is really the intermediation of that capital, the efficient intermediation of that capital. And I think that's really where, obviously, intermediaries and asset managers like us come in. I think, we mentioned the de-risking. I'm also aligned with Polari that probably creating another rating agency is not the right way to go, but I think that there are already many de-risking tools that exist. As you know, we have political risk insurance today, MIGA, ATI, Afreximbank. They are a blended finance structure with first loss that, from the likes of IFC, AFDB. So I think we should really have a framework where we rely more on those development institutions that traditionally have been the biggest provider of capital. I think where we need them is less in terms of providing capital than putting in place mechanism that basically alleviate somehow that risk perception, and I think there are tools that already exist. I think still that the biggest sort of factor that would create really confidence and that would alleviate the risk ultimately are 2 things. First of all, for these GCC institutions to partner with, parties, local institutions with deep knowledge of the market, because ultimately that's what it's all about. But also, I think, having co-investment, because I think it's, in investment world, it's really a good signal when local investors basically also put their money. And I think that is important that, even though it's a smaller pool of capital, I think I see room for more co-investment between GCC sovereign wealth fund and local pension funds. For example, there's been a quite interesting example actually in, again with Qatar, in Rwanda, where effectively there's a partnership between the Rwanda Social Security Board, which is a local pension fund, and the QIA. Obviously, the RSSB has only put like $50 million, but they managed to mobilize 250 million from QIA. And I think those type of partnership really would go a long way toward alleviating the risk. So I think really the key mitigant are really working and trusting good fund managers that are expert and know the local, the lay of the land, who can help better articulate the perception of risk. And on the other hand, making sure that local investors co-invest, because obviously they're on the ground, and I think they have a better insight as to where are the good opportunities.
Okay. Thank you, sir. James, coming to you, in your sector that is mostly focused on real estate, do you see joint initiatives being developed between GCC countries and your field? And if not, how can you attract those and develop those joint initiatives in the real estate space?
No, thank you very much. Before I come to the issue of real estate, I just want to, I think, make a broader point, which I think is important, which is, just briefly, is a vision of what we can do together. I think between GCC and Africa, what I think the big opportunity is if we partner to then address world supply of goods and services. So it's less of an investment into Africa to address the African market, but more of a partnership for us to address global supply. I think that combined partnership will be a lot stronger. Now, the issue of the fragmentation of our markets is a structural problem, because Africa has been designed to be an importer of finished goods and an exporter of raw materials. So naturally, people protect their national markets. But that is still an advantage, because we can take advantage of the outward focus of Africa to then be more of an exporter. And now to work with African institutions like ourselves to do the early stage de-risking, because we can do the early stage project development, and Gulf come with their capital to scale. But to scale not just for the African market, but for the global market. If you scale for the global market, you'll bring more Africans into the formal sector. If you bring more Africans to the formal sector, then actually you'll expand the purchasing power of the domestic market. And that then becomes a secondary opportunity and growth savings. That's a big opportunity I see here. Thank you.
Thank you, James. Dear Mohammed, from the Doha Bank's perspective and the Qatar perspective, what are the finance mechanisms that can be put in place that you see that would ease the capital flows from Qatar to African countries? There are a few examples that have been mentioned, and it would be good to know what are actually specifically what are those mechanisms that were used in order to attract this capital.
In fact, as you mentioned, some of the stuff you actually did mention in terms of a blended structure, but especially as us banks operating the GCC, we would, anything to mitigate the risk as much as possible, we would, it would help us because it would help our respective credit committees and how we can convince them otherwise. So involving us in terms of African Exim Bank, for example, there are certain transactions that, whereby they would provide some sort of mitigation insurance. So that, and also with IFC as well. So, I mean, it's, for example, those two institutions, we've been having dealings with them for the last 5 or so years. So there has been a good amount of track that has been established with those very entities and other PAN development organizations as well. But additionally, with GCC liquidity looking for diversification, we're starting to partner with other GCC countries into the African continent. So, for example, I can't really mention the African nation, but our group CEO has just recently signed an LOI last week to participate in a large African project. So it's been ongoing. It's always been, and before there was that added insurance but you're seeing less and less because the trust has already been established. So it's just now of maximizing as much as possible. And the whole dynamic of that north-south is tilting to the new south-south, and you're seeing dividends of it pretty much on a daily basis. Yeah.
Great, that's amazing. Thank you very much, Mohammed.
Thank you.
Dear Ahmed, before we ask questions to the audience, if there is anybody that has questions from the audience, can you tell us from a political perspective if it is easier to include and to work with governments in terms of G2G and then bring in the private sector? What is the angle that Oman, for example, will take vis-a-vis investing finance in the capital in African countries? Is it mostly governmental related projects or private projects? And the sectors, obviously.
Both ways. But, you know, like in Oman, we have our Oman Investment Authority, which is our sovereign fund. And they deal with investment in a very professional, very private sector mode. So, and they could take the lead in some of these projects. But also, I would, since the state of Qatar has been very successful in this, they could take a lead by forming a consortium of either government, Gulf sovereign funds, or consortium of financiers from the Gulf, and they approach these matters in unison, as you know, a group of investors from. And one other, before coming here, I was reading the news. One other way would be perhaps some of the stronger African banks, they can either apply to open a branch, an investment branch, or they call it a representative office. This bank in Tanzania, the biggest bank, CBD something, just opened in Dubai, the Dubai Financial Center, I think about a month ago. So there were so many ways, not just one way. I don't think the government in Oman, and I think in the rest of the Gulf countries, would facilitate, would make things easy, would support, but then negotiation, analysis, etc., will be done on a strictly professional private sector method.
Thank you very much. Maybe we can take a few questions from the audience, please, very briefly. Does anybody have a question for one of our speakers? I see the lady there.
Thank you. Excellent panel. One of the keynote speakers stressed that her company was a female-led, or is a female-led company. And I look at this stage, there's no woman. Representation really matters in Africa and in the Gulf. Excuse me. I think when we're talking about investment, we talked about the fact that a lot of Africans are underbanked or unbanked. Majority are women. So can the panel talk a little bit about innovative financing? What mechanisms exist that can boost this cooperation between the Gulf and Africa? And in fact, there are a lot of women-led African funds that are building businesses on the continent that need the type of investment that you're talking about this morning. So can we just bring that into the conversation? Thank you very much.
The question was, what about the mechanism and how do we make sure that capital also goes into investments led by women? that are female-led. Who wants to answer that in Africa?
Yeah, I can share an example of what we are doing at EcoBank. We set up a program which is a gender-based financing program that we call Elevate. And that is directly aimed to finance businesses that are managed, built, or for women. And the target is to finance close to 350,000 companies in Africa that are owned or managed by women. The way that we articulate it is around 3 pillars. One is financing, and it's going to be financing with reduced costs. Number 2 is a training for financing program, i.e. you're going to go through a capacity building program, and if you succeed those capacity building program, then you have access to the financing. And then number 3 is about preparing those companies for the future and putting them in partnership with technology and everything that they need to do to be more digitized. So those are the 3 pillars of the program, and it's scalable. We have done close to 50,000 companies this year, and the plan is to go to 350,000 companies as soon as possible. I think beyond the gender-based financing, what is important for all of us here is to be also very innovative in terms of what we want to do in financing. And we didn't speak about it, but if you look at all the sectors that are potentially viable for this, is SME financing. What can we do in SME financing? And for SME financing, we need to be extremely innovative, especially thinking about how we can do blended finance, how we can use risk mitigant, how we can use mezzanine funding to make sure that we do it well in SME financing, but definitely that's a space where we need to be more innovative, in my opinion.
Thank you, Paul-Henri. Gentlemen?
Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Yassine Aman Muhammad Al-Jabarti. I will speak in behalf of my company as a founder and partner with chairman, my partner Saleh Jawaz. I would like to take this opportunity to thank and congratulate to Arena and our friend Alex for this powerful and well-thought African Gulf Cooperation Dialogue for hosting. Our office is called, I'm from GACR, Gulf African Commercial Representation. Our office, they call us unofficial ambassadors of Africa. Our office has been visited by African prime ministers and ministers because we promote Africa, introduce very high net worth GCC country individuals to Africa. We have introduced our office become known when anyone from GCC country thinks about investing in Africa. They come to our office. We have been also collaborating with our friends, whom some of them are here, like the ambassador of Angola, and most of the ambassadors based in Doha visit our office. Even when there are some delegations to Qatar, we try to help them as much as we can in various ways. During FIFA World Cup, we helped Senegal, Ghana, Angola, Cameroon, before and during and after the World Cup in many other ways. We have a fantastic project called African Cultural and Business Center to establish next year here in Qatar. This is in 12 various communications in terms of FDI, foreign direct investment, culture, education, because what we would like to do is so many people don't have clue about how beautiful Africa, how investable it is. So it is good, this kind of initiative. we are talking about hundreds of billions. In my opinion, this is not like one conference. We want to work every day to make and create a strong link between GCC countries and Africa. I would like to invite you and host you, and when you have time, to visit our office and explain our project, our business, what we are trying to link between Africa and Gulf. Thank you very much.
Thank you so much for this, and we welcome the invitation. So we don't have much more time. I'd like to take this minute just to summarize very quickly on a few words what has been said in this panel. The idea obviously was to discuss about the different type of projects or sectors where we could invest, but since we had finance leaders in front of us, I think it was important to actually focus on finance and capital with regards to GCC and Africa. And the few points that have been mentioned are diversification play, risk mitigation, developing joint platforms, and also opening rep office and embassies where perception can be mitigated between Africa and the GCC. And those are important topics because capital needs to speak the same language. When you have an investor, he needs to speak with the same language as the project developer or as the entrepreneur or as the SMEs. So on those notes, I would like to really thank all our distinguished panelists for their performance and for their presence and their knowledge and sharing that with us. I'd like to thank the State of Qatar and obviously for welcoming us here, and Choiseul for organizing this great event. So please, let's give a round of applause to our distinguished guests.
Thank you, gentlemen. Let me extend a heartfelt thank you to our moderator as well. Kindly step to the center of the stage for a group photo. And again, very interesting conversation, different perspectives, ground rules, the required setup, everything we need to talk about in order to make these partnerships flourish. Kindly step on the front of the stage for a group photo. And then, ladies and gentlemen, we will move straight into the next part of our program to keep us on schedule. Thank you very much. Round of applause, everyone, for our first round table. Thank you, gentlemen.